Hi everyone and welcome back to my morning report chart appraisals on Friday the 6th of March. It is Non-farm Payrolls Friday and I'm going to be talking about euro dollar now, and this euro chart continues to break to the downside. It is gathering momentum as well, even though we're in front of this payrolls report, and normally speaking you'd find a bit of consolidation in front of this. Certainly the market is not taking it as that. It's putting pressure on the euro to the downside, and the dollar is strengthening as a result. Now this euro has broken back below the 10.98 level. We'd seen that a couple of days ago, and now it's consolidating consolidating the move lower in terms of breaking down below $1.10, and that $1.10 psychological level has been broken. It got broken yesterday, and it certainly looks like it's accelerating down now. Now the next move is 109.67, which I've drawn in here the Fibonacci projection of this bear leg that we saw from December to January, projected lower from 115.32. Now that gives us a 38.2% projection of 109.67, and then subsequently below that, if we saw the move below that, 107.92 is the next level that you need to be thinking about. Certainly on the downside, the euro is remaining fairly strongly negative. Downside potential still on this chart. RSI 25.17 it got down to in that January sell-off. MACD line's only just crossed over, still further downside, and also stochastics looking very weak as well. So pretty much across the board, the daily chart looking very negative. Now, in terms of the hourly chart, what are we seeing? Well, we've seen the last couple of hours. The European session has started to really sell off the euro, and it's coming on decent volume as well, it would seem. So it looks like the market's taking a view that the euro is going lower on this payrolls report at the moment, and it's left a resistance at around 10.30. $1.1030 seems to be the resistance area, but obviously that 110.98, that old support, becomes new resistance as well. But certainly it looks like further weakness in this chart. Now the 21-hour moving average over the last few days has not been too bad as a basis of resistance, so that's possibly something you could watch out for. That's at 10.20 at the moment. But it certainly looks like the pressure is on the downside, having just broken again to multi-year lows just in the last few minutes. And it certainly looks like it's going to be falling away. So I think any sort of rebound you get on this euro is likely to be a chance to sell. But you've got the big unknown in terms of the payrolls report this afternoon, and exactly what the impact that's going to be, we're not obviously going to know until it comes out. So the volatility around that report is as ever is going to be high, but even more so considering the downside pressure that we've got on the euro. So if it say for example surprised negatively, we could see a sharp technical rally potentially. But it's very difficult to know, because obviously the euro weakness is driving euro dollar lower as much as the strong dollar is as well. So it's very difficult to say exactly how this reaction is going to be, or how big it's going to be to the upside. Say for example, if there was a negative surprise, but it's a difficult one to play. But certainly at the moment, in front of this report, the euro is under pressure, sort of trading to the downside, and it certainly looks like it's going to be testing that 109.67 Fibonacci projection target. So I wish you good luck in your trading in euro today. It could be a volatile one, and I will speak to you later. Thank you.